Hello and welcome to the third episode of the High Signal podcast by Derive. We are joined this week by our first ever guest, a very special guest, a gentleman by the name of Nick Forster, who some of you may know, but Nick's actually the chief exec and founder of Derive. So we've got some questions today to I don't want to do like a boring interview. We're going to try and make it a little bit more interesting to get into a little bit more about who Nick is and stuff maybe you've wondered before. And then a little bit about the platform, although we promise we won't turn this into a shill session, much more stuff that's genuinely interesting to anyone who's a serious options trader, that's for sure. And then we'll cover some market overview and what's been going on for the last week. And as always, I'm joined by my co-host, Sean. How are you doing, Sean?
Not too bad. Markets are going all right. Not too many losses this week.
Let's change. What about yourself, Nick? How's your week been?
Doing well. Off to a quick start. It's only Tuesday, so but yeah, markets are quiet, so it's been a week for consolidating.
Okay, well, look, let's get straight into the interesting stuff. And I would say that you can not answer any question that you don't want to, but that's not true. You must answer all questions. But we'll try and keep them interesting. I think some of the questions that we came up with for Nick were yours as well, Sean. So do you want to start us off? Some of yours are better than mine, I think.
Oh, no, well, we can go in whatever order. But I guess, Nick, maybe to start it off, take us through your background. Where did you come from before Derive? What did you do in a previous life?
Yeah. So I studied maths, economics background. And at the University of Sydney, I was a equity options trader in the US equity options markets at a firm called SIG. Very high gambling culture, very high, edge-based lifestyle, positive expectancy, framing everything as a bet kind of culture. So very much carried that through to the crypto world.
So I don't know, are there any interesting stories or what were the key learnings you had from that, or what was that like?
I think one of the best things I did at SIG was play this game called Trade or Titan. And we played this before. It forces you, effectively, when you make a statement, you can make it tradable by playing this game. So if someone makes a grand pronouncement, I think that I could drive across the United States in 25 hours if you gave me a Ferrari. You could, sort of say I reckon that, the time to drive across the US is double that. And you can place a bet on that by playing this game, which forces both of you to engage in this kind of process where one of you says, I can make a market that is, 50 percentage points wide, and the other has the option to either trade on a 50 percentage point wide market for the probability. You can make a sort of sports betting style market on that outcome, that it is greater than 50 hours or less than 50 hours. Or you can decide that 50% is too wide, so I can make a tighter market. So I can be 40% wide. And eventually you do this sort of reverse Dutch auction style bidding process where you get to a market of 5 percentage point widths. So for example, if we were trading on, I guess to simplify it a little better, Ian, if we were trading on the outcome of the next coin flip, you would want to make a market that is centered around 50%. So I would be if you let me have it 4% wide, that's pretty crazy because we all know how much a coin flip should trade at. It's 50-50. I'd be 48 at 52% wide, and you'd either have to buy heads or sell heads, and I'd take the spread. And so you can play this crazy trading game, which is a simple concept, a very simple mechanic. You can play it with 2 people, you can play it with 10 people, and then you have ideally you want 5 people going up and 5 people going down. And it forces you to make markets on some unconventional things. You can also do it on derivatives. And so based on, Ian, we could trade how long Sean thinks it would take him to drive across the United States. And it settles to whatever Sean thinks. Is you have to make markets around, your assessment of Sean's ability to make a prediction. And it gets even weirder. You can do what Sean, the number of hours Sean thinks times, the number of true hours it is. And it's like this weird market where if Sean says 100 hours or, Sean says like 3 hours, it can really skew the distribution. So you start to get like into all of this like mindset of I can make a price on anything, but I'm going to have to skew my markets, not based on the true value. Like, I guess the last example before I wrap up this long-winded explanation is Ian. If you were saying to me like all the time, like I always bet heads, I have to bet heads like on a coin flip, like I feel it in my gut. I know like it should be 50-50, but I'm always a heads man. Like I just have to do it. I would make my four-wide market like 50% bid on heads and add 54, or I'd even potentially go higher and make it 52 or 56, because I'm not making a market on like exactly what the true fair is. You sort of come to the conclusion you should probably be making markets on like to maximize, like to try and get as much juice out of Ian, knowing that your bias is that you like to buy heads. So you start to have these weird like learnings, and all these sort of learnings about how to make markets and trade come to light, like when to, I got absolutely fucking hosed in my first week. Sorry, I shouldn't swear on this.
No, you can.
I got hosed in my like first week at SIG because I had to make a market on the largest diamond, in like weight kilogram terms, and it turns out the largest diamond is a planet. Like it's a planet made out of diamonds, and so I lost $3,000 to like 5 people who all bought my like ridiculously high market when I got it like a kilometer wide, which was a joke width in the first place. So, yeah, it's like toxic information, skewed distributions, making markets around like where you think it will trade versus what the actual true fair value is. I think these are all like very interesting concepts that you can learn viscerally through this game. And I did a lot of that in my first year before we could actually start trading for real on the markets.
How did you feel when you saw Polymarket hit the big time based on all of that time thinking that way?
Love it. I've been dabbling with Polymarket. I had the dumbest sweat of my life like a couple months ago when I was betting against Trump saying things on a prem conference. So I had like $5,000 against Trump saying Bitcoin, and 95% or like 90%. So I was collecting like $500. It was a really stupid strat. So like fun.
Like they made a business out of the game, and it became incredibly able to predict things.
Exactly. It's no wonder that like all of the big, SIG is behind it in Kalshi. They invested in it's very much like the same philosophy and mentality that truth comes from markets. And, I'm a big fan of that. I'm a big fan of how options can interact, not to shill. I'm not going to be shilling on this podcast. But I'm a big fan of that interaction of like, having very precise bets on discrete events in the future, and then being able to slide up and down your leverage, and your precision in making that bet with options. So big fan of prediction markets. They're very fun, although sometimes they yield bets which are actually not fun to play out in real time, like watching a press conference.
So that was interesting about all of the betting market stuff. Maybe the question next would be, how did you end up getting in crypto in the first place, coming from equities trading?
I was actually kind of in crypto before I was in equity options. So like 2016-ish, I was a relatively poor college student flipping sports betting promos in Australia for money, saved up like a few grand, and heard about Bitcoin because Craig Wright was Australian, the guy claiming to be Satoshi, and he got raided by the Australian tax office at a house that was down the street from a house I went to, a friend's house, frequently growing up. So I was interested, read about it for the first time, quickly found ETH from there, was holding some ETH and panic sold during the Dow hack when ETH was at like $5 or $6. You would think I had a lot of money because of that. And it's not the case. As always, there's a million ways you could pummel a bag, and I think I indulged in about 600,000 of them. So, that's why I'm still grinding. But it's kind of been interested in really ETH and Bitcoin since 2016, and kind of went into my trading journey and always kept an eye on it, and decided to take a full leap after DeFi summer.
I saw on CT this week, someone describe or put out the statement, Bitcoin is the idea and Ethereum is the execution. Would you agree with that?
Yes and no. I think like Bitcoin has special provenance in crypto. It wasn't what it set out to be in terms of, I guess the idea was stable coins, or like some, not stable coins, but like a source of currency and payments that was digitally native. Stable coins became that because people don't want a volatile, currency for payments. But I do think Bitcoin has a special place to preserve wealth from governments. That is kind of preserve the ultimate unit of account, which is like, store of wealth from, and make it independent from political interference. I mean, in theory, better than any asset has in history. It can never be fully independent. But I think that's why I don't agree that Ethereum is necessarily taken that role. And I could still see Ethereum, eventually losing its advantage, and even in smart contracts, as much as I am in ETH Maxi, it's possible. I don't see that for Bitcoin.
Where would you see it losing it to? Like, is it any of the current like L2s or like L1s like Solana or Sui? Or is it something brand new?
It depends what you mean by Ethereum, right? Like, do you mean the EVM and the smart contracts being forked a million times independent of the actual network? Do you mean the network at L1 itself with the ETH gas token? I think they're separate things. I think like the EVM and the ideas will win in some way, shape, or form. I don't know if that necessarily all comes back to mainnet ETH though. I hold a bunch of ETH. I still hold the bag, but I think we are likely to see more of a diffuse group of networks that are all connected together still than we are to see like one uniform settlement layer.
That makes sense. I guess like the worry would always be like some kind of, Amazon chain or Google chain appearing, right? Like that has this army of developers, army of resources that can very rapidly, deploy and compete with ETH. But then obviously that completely undermines the whole notion of like decentralization or this multipolar world basically. So yeah, I don't know. It's always interesting. ETH is like 60% of TVL and DeFi now, so it's probably not going anywhere anytime soon. But still something to keep an eye out for, because that has bled, right? It was like 90% several years ago, but still 60% is. I mean, for the record, ETH Maxi here as well. I also have too much of my life savings in this token. But yeah, it's always important to, I guess, keep an eye out for that sort of thing.
Did you guys see this week that Dankrad Feist, one of the original researchers from the Ethereum Foundation, I'm going to think of the right word, because I actually don't, I think the guy can do whatever he likes, is my own take on it, but I think it was like words thrown around like went to the other side, or like traitor, like some really extreme words with him going over to Tempo and kind of decentralized versus centralized. I wondered if either of you had a take on that.
Well, it was crazy. He was ringing the NASDAQ bell next to Joe Lubin for an Ethereum treasury vehicle less than 2 months ago. Right. And so this would certainly rank in the top 10 anime betrayals history. I mean, I don't think Ethereum has cracked it. Like, it's amazing. I love Ethereum. Like, I'm still, like, it's the only L1 I hold, but and I don't necessarily love what's going on with Tempo. I don't think that the answer is going to be another corpo chain that's just, kind of spun up. I do think if it was ever going to work, it's probably now that there's government blessing behind all of these new, behind all of the crypto native sort of infra and techniques. So it's kind of now or never, but I can't really begrudge someone who spent 7 years contributing to an ecosystem from flipping. Like, you can go from, wherever you're in, particularly those sort of extremely smart researchers tend to go where the interesting problems are. And if he's finding more interesting problems elsewhere, I mean, maybe it is telling, but ultimately people moving on after 7 years is very common. So I'm not really surprised. I don't think it necessarily heralds something super bearish about Ethereum either.
I saw Sriram from Eigen Labs liked and said congrats, and I immediately responded saying, "Be careful, they'll have the pitchforks out again," because this whole thing blew up last time, right? When who was the other researcher? I think two of
Max Resnick. Max Resnick left for Solana like last year, I think.
It was like I gonna put it was the French name. It'll come back to me. Anyhow, yeah. So it's like almost this whole thing happened before. There was an enormous backlash, right? And then it was they stepped out. They went back in and said, "Yeah, you're right. You know, we're like eat a humble pie. We made the wrong move here." And now it's kind of playing out again. But this time, it seems a little bit more final. It seems like he's made his decision and moved over. So interesting to see how whether that's the first of many, or whether the same kind of backlash occurs.
Speaking of new things, what motivated you to start Derive? Like what takes someone from, an equities trader to go start up a brand new business? There were no options in crypto at the time. What made you take that leap? What was the opportunity that you saw there?
There were options, certainly centralized ones. Deribit still hadn't hit full stride, but it was growing. There were a few on-chain teams working on it as well, but felt like an area that I could uniquely sort of take skills to. I was convinced that this is where finance was headed on-chain. I was definitely right about that. There were moments in the last 5 years where it has seemed uncertain to a lot of people as to whether this is the right bet to make. Absolutely 100% nailed it. Like this is where finance is going. That's never been more clear. It's going to run on chain rails. Options are going to be ready. On-chain options in 2021. One of the worst takes I've had in terms of timing. I'm fully convinced that this thesis is just step 2 of that. It's like the natural conclusion if finance is running on chain. Options are such a great, unique instrument for that world, particularly as trading becomes even more diversified, but also precise. You have, millions of market participants with very unique and nuanced views who want to express very precise opinions. And that's people, individuals, but also, AI agents and bots and, in this sort of crazy global financial playground that we have, the more precise of a bet you can make, which options allow you to make, the more money you're going to make and the less downside you're going to have, the less path dependency you're going to have, which a lot of perp traders found out about, a week and a half ago. So I think they are a really great instrument for, this programmable financial environment we're building. 2021 was way too early. And I think that is the conclusion, I guess. But the reason I wanted to leave in the first place was I was convinced that this world was going to come about. It's just a matter of when. I was wrong on the timing. I think I was wrong by about 4 or 5 years, which puts us squarely in the golden zone right now for on-chain options adoption. And I swear to God, I'm not going to keep shilling, but it is happening now. The markets are mature enough, and the infrastructure and the environment is mature enough. And so, I'm not going to do 2021 me a disservice. The one who quit his job, which was a phenomenal job, to bring about this vision, just to miss this opportunity now, because this is really when the opportunity exists.
I think for me, there was a wider category of things that the question was still open whether they should be on-chain or not. I think there was a time everything was doing so well in crypto. It was everything should be on-chain. Get everything on-chain, get art on-chain, get music on-chain. And I feel I remember reading the Lyra white paper, to bring myself up to speed when I first came to contact with using Lyra. And I absolutely had the thought, can all this fit on chain? Does this make sense? All this, all of that calculation. I think that's one of the things people don't necessarily realize is these are complex things across multiple strikes and expiries. And when you try and bring all of that logic on chain, especially in a kind of an AMM setup, that's a rather complex thing to try and achieve. So I wondered, I know initially you guys had an AMM setup, but then kind of moved it into a V2 and then a V3. I know I hear you on the shill thing, but this is genuinely interesting to see whether the AMM, will ever return or kind of what learnings came out of that experiment.
Yeah, I mean, I'll also let Sean weigh in on this because he has some good takes here. But I think it can in a slightly different form. We definitely were guilty of over engineering that sort of stuff early days, but at the same time, in fairness to us, there weren't that many alternatives like that we could go for. The fully on-chain AMM was, I think, the best product on the market in 2021 and 2022. It just was a small total addressable market. And also just not capable of handling the big size that really dominates options flows. I think it could come back. That format would look like, I think, a lot less hands-on from like what's encoded on chain. A lot more like we kind of have the earn vaults, which take on some form of this, which I think need a full new generation to really manifest this vision. But they have guardrails that make them trustless. It means that they can't be corrupted. But also then like a wide range of flexibility in terms of how the strategies are actually executed, which allows for more sophisticated market-making algorithms, maybe more private ones too, which is extremely important in market making. You can't be giving away every trade you do because you can just quite easily back out, what strategy you're using and the signals that you're using given a pattern of trades.
I'd say, from my recollection, like the AMM we had 2 iterations of the AMM. So the first one was like fully collateralized. It was unhedged. So, as a proof of concept, it worked surprisingly well. However, the problem was like, collateralization was pretty poor. And also, it would take on a lot of directional risk. So there were some weeks where, prices would move substantially in one direction and the pool would take on quite a loss. I remember I went back and I back tested it at some point because we did add in delta hedging. And like when you added in delta hedging to its historical performance, like I think it was returning like 5 to 10%. Now, obviously, as Nick said, it's like small size and all of that. But, for like a pretty simple design and, both simple and over-engineered in varying degrees, like it performed really well. As for like how like AMMs could continue, like it's like a really hard problem. Like you think, like why can't we just port the logic over that we had from like the V1, the V1.1? I think we called it Avalon. I think the problems with that would be like there are just so many dimensions of risk you'd have to worry about because an AMM would be built within the current system. That would mean that it would have to subject itself to like all the margin rules. So then you have to worry about risk. Then you have to worry about hedging. You then also have to worry about like, how is it sourcing its data feeds? How is it putting all these guardrails on? It very quickly becomes like a very untenable problem. Then there's the question of like maintenance and all of that. So like you set the parameters at some point. Once those parameters are set, how are they changed? They probably would have to be changed somewhat frequently. So it becomes, exponentially more difficult, especially in a system that is very general, right? Like our current risk engine system, anyone can come trade. That's market makers, normal traders, etc. But having this AMM structure, it sort of makes it a little bit harder to design for that current system.
It's like it's a great crypto experiment because in a way, like L1s to L2s was a similar mindset. That everything should exist on chain. There'll be data availability and there'll be consensus achieved. And then at some point they're kind of like, okay, how much of this needs to stay on chain? How much can we roll up to like a monolithic L1 and then have this, optimistic rollup or ZK rollups actually processing? Like, I feel like all of those things that we take for granted as, that was the right way to do it. You had to kind of get it wrong or test what it was like to fill mainnet before you realized L2 made a bunch of sense. So I think you guys were just pioneers out there saying a similar journey in the options world in that lane, saying, how could this work? And then optimizing until you get, the V3 model that we have now, which is arguably the best of both worlds.
I agree with that. I think like it was, to Sean's point as well, like remarkable kind of how well the first version of the AMM did. I wasn't expecting it to make, break even. I think it made a small amount of money in a couple of cases, and particularly during some challenging market conditions. So that was a shocking result, and it did, like, it's crazy like that you can kind of just put something out there which feels like it'll work in theory, at least to some degree, and then that can really spiral and like start a chain reaction of good things, which is kind of how we got here.
I think like one question that like comes like I've been getting constantly is sort of like why like there are 1,000,001 perp dexes and a lot of spot markets as well. Like why is the options market so slow to develop? Why is there not a plethora of options exchanges like there are for say for perps? I don't know. Wanted to get your take on that.
Yeah. It's just a monumentally more difficult problem to solve from a risk management perspective, from a liquidity development perspective. It's also more expensive. But the upshot to that is that like once you do build that network, you are like you sort of like indispensable. The people that you sign on and integrate with, it's much, much, much harder to pry away from because of those, like how difficult it is to set up and to build liquidity and to, onboard the users and the takers. They're much less mercenary than the crop of perp traders who are now conditioned to expecting, 40% of the token supply airdrop to them, after 6 to 12 months of activity. Like that's ultimately like a game that is going to run out at some point unless you find the core users, the people who need to make trades for financial reasons. Maybe that's hedging, maybe that's yield generation. Speculation is certainly one, but if you only get the speculators, and the speculators are speculating not just on the actual assets they're trading, but they're more speculating on the token that they're going to receive indirectly, you're just going to get this game repeating. So you do need something that people are coming back for a material reason. Those users are stickier. They're not just going to flip for, the prospect of a token. They need good execution for their financial trade that they need to put on. If you have a hedge for your sort of electricity intensive Bitcoin mining operation, you need to make sure that you're sort of breaking even next month, not like potentially receiving an airdrop in 12. So like I think with those cases, and as the on-chain economy becomes more sophisticated and things are more programmable, like these sort of integrations are going to become embedded into like the fabric of how on-chain finance works, and those users will not be going anywhere. And like that's ultimately who we're chasing and why we're focused on options, and that's been our positioning from day one. It continues to be our positioning. It's our contrarian bet. And as again, like it's taken a little longer to play out than I'd like, but it's a matter of when, not if.
Yeah, I think the other factor that's kind of beyond anyone's control, but also very real, is market sentiment. And that there've been cycles so far, right? There've been clearly identifiable cycles. And if I just kind of share my mindset that I think is indicative of the space, when we're in the depth of a bear, I question whether crypto's needed at all. Like I can't make a case for anything. I'm like, okay, maybe stable coins, maybe payments. At the height of a bull, everything should be on chain. Like wow, that could work. And I think it's like it's a liquidity piece, right? It's effectively like where are the flows and what makes something seem workable and seem possible and seem feasible. And then when everyone's kind of hoarding cash and being very defensive, and we haven't yet been through a cycle where Bitcoin is the debasement trade, really. I think people have talked about that. But now it really feels like even today, and we're not going to talk about my gold trades because they were doing so well until today. But, you can already see a slight rotation there if you look, and maybe it's the first sign of a rotation of maybe people thinking, okay, Bitcoin's going to close this relative gap to gold. And therefore, we'll go a little bit more risk on as we price in some of the Fed cuts that are coming, and that rotation starts to happen. So, before I get too much into the macro stuff, I just think again I see a parallel there with kind of the wider market and market cycles and crypto in general. I think in many ways, Lyra and then Derive has been at the frontier of crypto. And that if you looked at, and many other projects, so if you looked at like the core of what crypto was doing, and then you looked at what Lyra and Derive was doing, you saw a real example, a real test case for the technology.
Yeah, I'd certainly like to think so. It's on us really to prove out to prove out this thesis and to prove out where this technology ends up. I mean, it's been a refinement process, and I think we've come to I think the right balance. It's not perfect. There's more iterations to come. I think we'll be certainly looking at a lot of the ZK technology that's coming through, and we have been. It is revolutionary. It will change how trading works and finance works. It's, I think, gone through one of my hot takes is that ZK is very much under, it's like people are too down on it now relative to how high it was. We've gone through the trough of disillusionment and we're kind of coming out of that right now with ZK. And I think it'll be 6 months before the applications are, kind of everywhere and people are going to be catching up to that narrative. I do think it's coming back.
Is it the privacy component of it, or is it because my understanding is it greatly speeds up computation, right? Or compresses a lot of the computation. Is it that, or is it that component?
Yeah, and both. Privacy, I think it unlocks new ways of designing exchanges and markets, dark pools, things like that, that can really improve how finance functions and can do so verifiably, trustlessly, instantly, at scale. And that's just something we've never had before. And I'm expecting, there's a big ZK moment in 2022. And then, people were like, it's 5 years away. Still, a lot of the senior people in ZK were saying that all the tokens have done terribly. So everyone's given up. And I think we're, 3.5 years later, we're probably a year and a half away from ZK coming into, the mainstream again.
Well, my stockneck bags will be glad to hear it, which have not done super well. Are there any other catalysts that you see? I guess ZK is one of them. Is it regulation or deregulation, or is it RWAs? Is there what's going to trigger? I guess what's going to trigger the next cycle? Is there still a cycle? Sort of what's on your radar for what's the next sexy thing?
Well, I would say to a lot of people, I don't tell people I'm a crypto founder. I'd say I'm a fintech founder. I think that's true. I think this next year or two is going to continue to be defined by the intersection of traditional financial markets and all the tech and lessons that the crypto markets learned over the last 10 years. And I just expect that to be the dominant theme. I am very happy with the developments around how people are valuing tokens, in the market more broadly. I think it's a sign of maturity. I think it's a sign that we are probably ready for this transition and taking on a lot more real world financial activity as a kind of ecosystem than was true in 2022. Sure, there are still distorted, perverse incentives, but we're seeing the bodies float to the top, and mostly have done. So I'm excited. I think the themes are I only believe in cycles insofar as I just think particularly Bitcoin is now just a pure macro, long-term macro asset. And I don't think it might have day-to-day small correlations with the NASDAQ in the markets, but long-term, the trend is extremely clear. It's just correlated with the M2 money supply. And until you see big, governments either implode or reverse their stance on how they're dealing with money and, the fundamental unit of account in our society, then I don't expect that to change. And call that a cycle or whatever. I don't think it's necessary. I think cycles are dead. I think the industry has grown past that. It's now about the cycle. The only cycle that exists is kind of the business cycle.
What? Someone push you up? I don't know. We could maybe give you some. Oh, sorry. Did I drop?
You're back. And now you're back.
I'm back. Sorry.
Yeah.
What I was saying was, I'll just give a second for the editor. So yeah, on a recent podcast, I saw Arthur Hayes and Tom Lee's predictions for the end of the year. I don't know if you guys have seen them, but Arthur Hayes is predicting 250k Bitcoin, which is now 2 months, and Tom Lee is 250k Bitcoin. Arthur Hayes is 10k ETH, and Tom Lee's 12k ETH. So feel free to refrain from that competition, but take that as you will. You can either comment on the bullishness of those two commentators, or you can throw your own hat in the ring.
End of this year, like in 2 months.
Right.
I think Bitcoin like 150k, 160k. It's not too outrageous. I mean, it's still massive increase from here in 2 months. I am bullish through year end. I think ETH, probably like 5.5k, that kind of thing. Nothing like, I don't see it going to 10 anytime soon. I think it's going to create a whole new wave of sellers in the 5 to 10k range.
If you look out longer term, Nick, it's like, I don't know, it gets harder and harder and harder to predict, right? But if you imagine crypto maybe in a decade, what do you expect we see? And how different is that from what we see today?
I think we see almost like an intense-based financial system, and I don't mean intense in like the traditional or like the sort of off-chain prover kind of thing, but I think the user flow will be something like expressing an opinion around how you want to use your savings or accumulate money, and for most of that job being done for you by either an algorithm that does it trustlessly for you, or like a neobank type provider like an EtherFi that will be like the front end to accessing the global financial markets, where you have essentially all of the assets in the world that are riskless, competing for your dollar with yield. On the flip side, I am hopeful that things, we start tackling problems like mortgage origination, right? Where like, if you actually think about how a mortgage happens, it's very sophisticated on the one hand, but on the other, it's an interviews and paperwork. You have like 3 or 4 banks that you're competing with, that are competing for your sort of massive, biggest financial decision you make in your lifetime. I'd like to see a world where that financing gets mediated and separated from the interviewing process, and it's maybe you submit an interview and it's the entire global market of capital competing to lend you that money. It might sound naive, but I just think all of these advantages get competed away. A dollar is a dollar, and becomes homogenous more globally, as opposed to you have these small regional markets that are, kind of dominated by 3 or 4 oligopolistic players. So for crypto, I think that means like protocols like Derive, protocols that are doing lending or whatever, like you just need to like become as integratable as possible, so that like, and build up your network effects so that like, these applications that face the end users ultimately can hook into your liquidity and don't have an incentive to go and solve all those problems from scratch themselves, which they won't, because it's just so much harder versus, putting on a front end, doing some marketing and clipping a fee, which is what we're starting to see with Hyperliquid. I do think that's where we're getting to in the industry long term. And the only way as a protocol or a team you defend yourself is by building up a network effect that is durable, which requires, liquidity, long-term repeat customers, and people who are there for real financial reasons.
And huge props for making a 10-year forecast without saying AI once.
Well, who's going to be making those decisions? AI. I do think like it is relevant, it is important, and I do think a lot of those sort of like assessing and taking in the whole on-chain landscape and routing will be done by, agents or, people who can, instruments that can take in all of that context and process it, because I think it will be exponentially increasing in terms of the amount of information out there and opportunities and risks.
Agree.
One last question from my end was like, what's your unpopular opinion or contrarian opinion? You can't say options.
Well, I mean, I kind of already said it. It's that like, I mean, the first one that comes to mind is I just think you can't judge the performance of a perps exchange until it's given out like a majority of its airdrop like allocation. Because I think like I would say that like for people who are framing perps. They are a great financial instrument, particularly for speculation. They're very simple, great experience for retail, important market opportunity, all of the above. But as a business, very, very difficult to make your name in perps. You better have some staying power because it is also one of the easier markets to spin up and compete with in terms of liquidity. So my expectation is that like, you know, there are like 500 different perp protocols only. And the differentiation is then, I would say like most people are wasting their time at this point. I think the winners are already out there. And if they're not, then they're never going to exist. Like, good luck beating what Hyperliquid did in terms of distribution and network effects and building that up. If they can't do it, there's no way anyone else is going to be able to do that without another DEX coming along and launching another points program.
I think that is the end of our grilling session. I think we've kind of penned some questions up front, but if you're down to hang around for a little bit, Nick, we'll just typically run through the markets. It'd be great to get your views on a few of the more recent kind of happenings and price action.
Yeah, sounds great. Let's do it.
Cool. I got a price notification just before. So hopefully things haven't gone completely to shit while we've been talking. What do we have? So you got a little dump on ETH, I guess. I mean, markets haven't been too bad this week. I do remember last Friday, I was on a call with a few friends commiserating over the Friday night dump. But things seem to have recovered somewhat. I mean, Nick, to your point of like 5,500 ETH, what was it, 150K Bitcoin? What would we have to do? Bitcoin would have to do almost like 40% from here. ETH would have to do almost like 30-40%. I mean, it's doable. Like, what would you say would catalyze that sort of pump up towards the end of the year?
I think the path is preordained, my friend. Here, on any given day, you must not question why Bitcoin is up. It's do what it does. But seriously, I think like macro conditions, the gold move, I think like the picture is sort of clearing up and becoming increasingly obvious that government finances are deteriorating around the world and more people are catching on to that trade. And I really do think we are running out of like alternative investments that make sense. Gold's moved. Real estate is so like overvalued in so many parts of the world, but also very difficult to trade in and out of. You certainly can't take it with you across borders. And the more unstable the world gets, the more attractive and obvious Bitcoin becomes. And then Bitcoin drives everything. There's no way it's getting to 5,500 if Bitcoin sticks around at 100K.
Well, speaking of sort of that, like, you know, Fed's odds of a Fed cut on, was it 29th? They're like literally 99% right now. 1% chance of nothing happening. I don't know, maybe you could take us through sort of the more of that debasement trade or sort of how you think this will impact like the prices of Bitcoin and ETH.
I wish I had a better thesis on this. Like something more sophisticated to tell you, but like, again, it's just more evidence that like the thing to watch for to invalidate this and to like flip the other way is a major global government making it a priority to balance the books and not at the same time engage in like quantitative easing, like behind the, kind of like under the table. If you find that happening and like people getting elected on the platform without getting destroyed electorally, like then I would be like, okay, it's time to reassess where my position is with Bitcoin and like potentially get a lot more defensive with respect to risk assets. With that not in place, I think the move is like, don't try and time it too hard. I like the idea of long dated options and getting some leverage that, is not path dependent, because I think the line is just going to be, continue to be up and to the right over time. So I do think we had 250K. It's a matter of, again, when, not if. The main thing is to not get shaken out in the meantime.
Ian, what do you think?
Yeah, I fully agree with what Nick said. One concept that I think is really important for people to understand is the concept of what is priced into a market. And by that, I mean, when you see something like this, and again, I feel like every episode I mention this, but I think it's a super important concept, is when you're trading, and Nick knows this firsthand, retail's trading against smart money. And smart money is called that for a reason. And they, whether it's like analytics or algorithms or HFT, things like this, like the closest you could like speculate on it might be like a polymarket bet. But from a true kind of trading and macro perspective, this is really, really old news. And the only thing that I think would make a difference directly from this decision would be if they don't cut. Because when something's that priced into a market, the market's already in real time behaving like it already happened. So, so I think my wider thesis is, I think, from the first few episodes, is very much one of fiscal dominance, very much one of upcoming yield curve control. And I think, or as Nick said, like, under the table quantitative easing, I certainly subscribe to that. And I also subscribe to don't be shaken out, right? Because I think while liquidity is plentiful, I see no reason to go risk off. You never know, right? And it might be, as I learned to my detriment already, if this isn't just a little pullback on gold, sometimes you should take some profits when you're flying high and RSI is at 87. But at the same time, I'm genuinely comfortable holding assets like that through a debasement lens into Q1 at least, assuming nothing significant changes.
Makes sense. Maybe on that, we can talk a bit about volatility and sort of how options are just traded on the podcast today. So here we have sort of the, on our right chart here, we have the at-the-money volatility for Bitcoin over the last year or so. So we've got 30, 90, and 180 days. I think we can see that like vol's gone from pretty much around 55 for all the tenors, went down to like a low around 30-40% around August this year, and now we're starting to see it rise about 47-ish%. Do you see vols going high in I don't know, what would your target vol be for the end of the year, or how do you see that panning out?
Look, I think to be consistent with my price targets, vol will need to be up a little bit, not massively. I think like BTC around that range probably gets back up to like, the low 50s, maybe 52, 55. Then ETH gets to, back into the 70s, 75, particularly if it finally breaks an all-time high for real. That would be an interesting moment for price discovery. So I would expect the skew on that part of the curve to be, I haven't looked at the markets in a week or so, like deeply in December, but I would expect the skew to be flat-ish, like, maybe still some put skew, but once you get up to the plus 40-50% at the end of year, it's only 2 months away. I expect to see some more volatility there.
I think, well, speaking of, we do have the skew, so this is normalized by at the money vol. So this will be the 25 delta core vol minus the 25 delta put vol, all divided by the at the money vol. So I don't know, it accounts for the different vol levels for the expiries. I guess over the last since June, I think I've put it at June here, we had pretty positive skew for like all the tenors. So 180 days from June would have been like this time, maybe end of the year sort of. And I think it's for at least 30 days, it's been a bit negative. So it has dropped quite a little bit. I don't know. The read I get from that is like short term, like 30 days. I think people are maybe a little bit worried, especially after all this Trump tariffs. I think we have the meeting with Xi in a couple of weeks, and I think that's being priced or reflected in the skew here. But like for longer dated, it's like 180 days. It doesn't seem as bad, but does that sort of gel with what you're thinking?
Yeah, I mean, I can't disagree with the quant expertise here in that read. I'm not the trader. I think it's been a while since I've honestly, to be perfectly honest, like it's been a little while since I've been actively trading because you can't trade and run a business at the same time. I fully believe that. Like when you're trading, if you're going to do well, you have to be all in and kind of like very much in, following the markets and the swings. So it's been a little while since I've fully put my ass on the line, except for the occasional, poly market, other than Derive, the occasional poly market earnings conference. Sorry, not earnings conference, press conference.
Actually, now that I think, is there like any edge there, or is that just fun? Like,
it's just testing some stuff out. There was a point where I was thinking I might try and figure out and I still think I will do this, like figure out a product that combines, some of the poly markets with Derive, and the options that we have. But again, I dabble when I'm interested, but I, quickly realize that I can't spend 30 minutes of my day staring at Trump, waiting for him to not say Bitcoin. It's just a waste of my time. And like ultimately, that's what happens when you spend your time trading. You need to be building systems and monitoring the markets and taking risk and monitoring risk. And it's like, to do it well, you have to be focused.
that makes sense. I guess one last little thing, unless Ian, you had anything to add.
Definitely not going to add anything to an ex-professional trader and a quant on options more.
I guess maybe we could quickly talk a bit about the DATs, because those are always hot stuff. So I think if people can read it, or for those who can't see, who are listening on Spotify, we had on October 11, Bitmine bought 200,000, just over 200,000 ETH. I can't do the maths on my head, but that's like 800 mil, or is that 80 mil? I don't know. It's a lot of ETH. And I don't know. I think that's like somewhat bullish. I think the DATs are, definitely have been driving a lot of this price action. They've gone from holding virtually no ETH at the start of the year to almost like 6% of the entire supply. That is good. And if you have like looked at a lot of these sort of companies, like you can see here, Bitmine has a target of 5% of the ETH supply. They currently hold just under 2.5%. So SharpLink, I think, is well off its goal. I think they're trying to hold 5% as well. So, assuming that these companies can maintain their levels of growth or stay alive in whatever downturn that does appear, I don't know, that will be a big driver for price action. So I always thought that that's something interesting to mention, if you guys had any thoughts on that.
I think that the point that we said last week, Sean, is still really relevant, which is like MNAV is just the indicator to watch. And, unless there's a premium there, this whole experiment doesn't make sense yet. So it's fascinating to watch. And I just wonder whether it's going to be how it feels right now is a winner-takes-all market to me. I think strategy dominates and Tom Lee dominates. And maybe there's going to be M&A activity, right? That they start picking off, if MNAV slips enough, or even cross-currency M&A, right? Do you bail out an Ethereum and swap it into Solana, or bail out a Solana and swap it into Bitcoin? And I just think it's an interesting experiment that's ongoing. That I don't want to I don't want to be too damning of it because we don't know yet. But I'm always skeptical, I suppose. I'm always skeptical when people repackage and wrap something, and I'm just not sure what it adds and brings. But I know on our guest roster we've got some interesting experts in the DAT space, so maybe in the coming weeks we'll hear more about some of the theories behind that.
Yeah, sounds good. How about you, Nick? What do you think of all this DAT mania?
Agreed. Don't think it's. I think the interesting thing for me is about when the forced selling is likely to occur. If you wanted to trade it, that's what I'd be focused on trying to model out and putting on hedges and probably ETH and Bitcoin options to try and scoop up cheap DATs when the capitulation does happen. It will happen at some point. It doesn't mean that doomed to be unsuccessful. They may be very, very well be successful, but did I just lose?
I don't know.
Comments? All right, no. They may well be successful, but there's going to be a moment in time where they trade very cheap to their NAV, and that's going to be one of the 5 times a year where you really need to be active in picking up free money on the grounds.
Oh, makes sense. Speaking of last thing for DATs, think I saw this in the news. Polychain has a $110 million investment to start a bearer chain crypto treasury. Frankly, I didn't know very much about bearer chain, and I was quite surprised to see this. I know there are like Solana DATs getting underway. I think there's talk of like Sui and XRP, but bearer chain was sort of not on my bingo list for treasury companies. I don't really know how bearer chain works, honestly, but Ian, I think you might. What are your thoughts on this?
Yeah, I do. I did geek out on proof of liquidity for a little bit, but in the context of this, I take like a simpler view around, not on my bingo card. It was on my bingo card because I kind of feel like if you have a market cap of a certain size, a DAT is just like an organization of your 10 biggest whales that can be corralled and can collaborate in some way to kind of, buy collectively. So in a way, if you have a coin of a certain scale and you don't have a DAT, it's almost a disadvantage at this point. So yeah, I feel like it's a bit of a Me Too offering where everyone's following through and saying, oh, maybe Hype should one and I should have one. And I think it kind of leads to, where does it end? Should there be a uni token DAT and an Aave DAT and a Derive DAT? Like, at what point is it just 6 whales coming together to make some fees off the top of it? Again, I don't want to drop into old fart British guy being whinging about it and being skeptical, but I remain unconvinced on exactly what they'll bring. But I'm fascinated to find out.
I think there was a Money Stuff article where Matt Levine talks about a DAT of DATs, very reminiscent of the CDO squared scene from The Big Short. So I don't know, we might see some crazier shit as this meta continues. But yeah, I don't know. Nick, what about you?
No strong comments on any of that. I think I don't disagree with the takes. It's all financial engineering and trying to find ways into markets that you're not already in and get exposure. So it makes sense people are doing this. I expect to see some sort of regulation around it, or increased regulation. Maybe we've already seen it a little bit from the exchange level, like with the NASDAQ, and some more gatekeeping. And then who knows, maybe in a year's time, those rules shift. So I kind of get why a lot of these teams are rushing in when things are a little murkier.
Makes sense. All right, last thing, and then we can wrap it up. This is like hot off the press, I guess. So Coinbase acquires Echo for almost $400 million. I'm not super familiar with Echo either, but I think, Ian, you have some color on this.
I absolutely love this. I think it's a phenomenal story, and it's, I guess I'm biased in a way. I come from we love our class systems here in the UK, right? So like whatever class you're from, whatever, particularly kind of class mobility is always celebrated. And one of the most celebrated routes is the working class hero, and I don't know if I'm the hero bit, but I'm the working class bit, that my parents had like normal jobs, as I would call them. And from all the things I've heard about Kobe, it's exactly the same for him. There was no one had a silver spoon or any huge capital. In fact, I've read many times that he brought £200 into crypto and never put another pound in, right? He just traded what he had. Again, some of the themes from the things I like to repeat to help people and to help traders would be, he's repeatedly gone on record and said he's not a fan of leverage, and that if he does use leverage, it's not perps. And I think that's around, like, if anything, he's talking about staying in spot, really. And I think that I just feel like he's one of those guys that you've got to have the right mindset, the right skills at the right time in the right place. And even then, you've got to keep getting it right. So to me, just nothing but respect for, and I should say some words about what actually happened here. I'm getting so excited about what Kobe's done. But just for those that haven't seen it, initially the news broke that Coinbase were buying the Up Only, which is Kobe and Ledger's podcast. If you haven't seen it, where have you been? There was an NFT that said, if you buy this for $25 million, they'll run another 8 episodes to whoever holds the token. So it breaks today that Coinbase were the buyer of this, and everyone was like, wow, that's incredible, 12.5 million each to run 8 more episodes. Only for an hour later, this news to break that the total price is probably 400 million, including some podcasts and also Echo. And I think Echo is an amazing platform. We promised we wouldn't shill, but I feel like I'm shilling Echo and Kobe more than I am anything else. I'm a huge admirer, nothing but respect for someone who's built like that, understood the markets, lost it all and come back a few times. And he says Brian Armstrong's willing to listen, that he has a bigger vision for how he's putting the different parts together. I think they bought Liquidify, is it, recently, and kind of building this decentralized funding stack. And, people like that, CZ, Brian Armstrong, you have to trust the vision. It's going somewhere and it's part of a bigger chess piece. But hats off from my perspective. Amazing deal.
Yeah, +1. I mean, I was in a Echo group where some guy admitted that he didn't understand the deal he was in, or like about to get in, and there was a 3-minute voice note that came through from Kobe, tearing this guy to shreds, being like, what did you think you were doing when you ticked the box that, I had like 10 boxes that asked you, do you understand what, this SPV structure means, and like what this USAFT deal means? When you said yes, like what exactly were you thinking? Like chewed this guy out who was a user of Echo and like roasted him in front of like 300 other people. Extremely funny. And then the guy got booted from the group. So he's definitely someone who is very in the weeds with his product and in touch with the users, and that usually ends in good things.
Just a last piece from me would be just if I did put a tweet out just with some questions from anyone that was interested really on Twitter, and we did get a couple of questions for Nick, so I'll pass them on. You can pass, or you can make a stab at any of these, Nick. But first one was from Professor Utonium, and he asked, which one do I go with first? Oh, one is very complicated, so I'll read it out to you, and you can decide whether you're interested to comment on this. But extreme Vanna can signal explosive breakouts if IV rises with a big move towards the extreme strike, due to market makers being forced to buy or sell spot in the direction of the move. Does Nick envision a day where Derive users will be able to view the current aggregated market maker Vanna exposure across strikes for each tenor?
I mean, I disagree with that framing a little bit. Like, I think Vanna's not something that's super. I mean, I certainly didn't look at it very frequently when I was trading. I mean, it's how your P&L changes with respect to implied vol moves, or like kind of. Well, sorry, not quite. Like it's like an options delta. That's I was thinking Vega option. Like Vanna is like. I'm barely even familiar with it. It's like how an option delta changes with respect to the IV, right, Sean? Like
It's one of the cross derivatives, yeah.
Which, the cross derivatives, I mean, somewhat relevant, but not super impactful for like these sort of big market moves. They can have big impacts on like an individual's position. But we are, I mean, like, with respect to like aggregated market maker metrics as well, you can kind of get a sense for what dealers are doing based on like the big block flow and like how it's reported. And so we can certainly work on some stats for that, but it's you can't go through and individually label like market making accounts and then report on that data. But yeah, certainly the cross, if you're in the cross Greeks and trying to figure out how market makers are positioned with respect to the cross Greeks, I'd be surprised if there was edge there. But maybe you are and you're crushing it. So hats off to you.
Maybe Professor Utonium's our next guest and he can explain to us his edge there or what he's trading. And just one more, please, Nick, from Alvaro. What do you think about the new trend of zero fees on perps? Has this viable or a race to the bottom?
I mean, how much more bottom can you get than in zero fees? I mean, I think like usually when you see the zero fees, that typically means, as I said, they're making money in other different ways. So I think it's this dynamic I described where like this is almost a necessary step for the scaled companies that do this to try and dissuade others from entering the perp race because it's a lower barrier to entry. I think this lasts for as long as there are new entrants trying to offer points and new tokens for a new perp text. It's kind of like one of the few tools you have to defend against that. I do think costs will be low long term across the board, and it's a volume game. But I expect fees to be slightly north of zero. Like, you got to make money from somewhere, whether that's, selling order flow or trading against it yourself or with your vault or whatever. Money will be made. It's just a question of how.
Awesome. Thank you for fielding so many questions and being patient with all of those that we wanted to put to you. It's been great to have you on. Been great to get to know you a little bit better. Anything to close us out, Sean?
No, I'm good. No, thanks for answering all the questions, Nick. Appreciate it.
Thanks for having me on, guys. It's good to chat.
Thanks, everyone. Look forward to seeing you next week.